Good morning, traders. I'm Jill Malandrino, global markets reporter at Nasdaq, and welcome to the last trading day of July 2017, where we're seeing the Dow Jones Industrial Average hit an all-time intraday high, and part of that could be due to participation from the energy sector, which was the leading of the 11 S&P 500 sectors to close out the last full week of trading for the month of July. Phil, thank you for joining me, as always, at the market site. Energy has had a bit of a rebound. Do you think fundamentals have changed at all within the oil market?
No, I don't actually. I think this is a false bounce. Basically, you have OPEC having had their meeting, and the Saudis said they're going to cut 600,000 more barrels, which sounds good, except the cap on Libya and Nigeria is more than 600,000 additional barrels that they'll put to market. Not only that, but they always cut this time of year. This is the time of year that they slow their production all the time. If you look, going back 2 years, 3 years, they're producing more now than they were 2 or 3 years ago. Everybody forgets how much they ramped up production prior to the cutbacks.
Right, so even though they are having cutbacks, it's cutbacks from record level production. Do you think that perhaps this 40 to 50, perhaps 55-ish range is appropriate for global supply and demand?
Well, I hope not 55 because we're short.
Well, but that
yeah.
mostly 40 to $50
we think 40 to 50 is the correct range. We think 50 is the top of the range. So at 50, we want to short pretty aggressively. And we think we should settle back down around 45 once this sort of like excitement goes. The closer we get to that December contract, the more pressure there is on the traders to start dumping their front month contracts. December already has a huge amount of open contracts that they're never going to sell. Right. We're going to come into a slow winter. They're going to be stuck with all these open orders. They've got to get liquidated at some point. The question is when. Right.
Well, is natural gas a different story? Because you tend to be a little bit more bullish on natty than you are on crude.
Well, natural gas is its own animal because, see, now in natural gas you have a brand new thing happening. The U.S. is exporting liquefied natural gas. That's a whole new project that never happened before. So now we have customers outside of America. That wouldn't be a big deal if you say, well, the whole world has X amount of natural gas and we're just giving them more. How does that help? It helps because we're the cheapest supplier of natural gas. So like Walmart, we're selling natural gas at the lowest prices, and we're going to, now that we can expand into other countries, we're able to displace some of the more expensive gas that's being sold in other countries. So from the American standpoint, it's good. From a global standpoint, you have to be careful because I know we got the global people. From a global standpoint, the local natural gas in like Asia is going to go down, and in Europe it's going to go down. So those are not good contracts to bet. U.S. natural gas, though, which is the cheapest natural gas in the world, that moves up, and eventually the market comes into like an equilibrium, maybe around, I think probably $3.50, $4. You'll end up at a global equilibrium for natural gas.
Let's wrap up with crude. I want to go back to that again. Do you think that we perhaps have seen the peak with crude oil prices, considering all the alternative energy that we're laying plans out for going forward?
Well, I'd hate to say peak because even on the way down, you're going to see the occasional supply disruption spikes for whatever reason. Certain people are going to go out of business, doing oil, and that's going to crimp supply for a certain amount of time. But the overwhelming effect is, for example, Tesla just released their Model 3. So like it or not, it's out there. BMW has their car. Mercedes has a smart car that's coming out, all-electric version. But much more significant than that, which nobody pays attention to, the new Toyota Prius Prime, or whatever they call it, I forget what they call it, but the new Toyota Prius gets up to 113 miles per gallon. And it has a 680-mile range. Everyone talks about range anxiety. The Prius gets, in cities, it gets 50. On highways, it can get 113 miles a gallon. That's including when it runs partially electric. And it has a 680-mile range on a tank of gas. That's
far superior than gasoline-powered cars.
And you can just, you go to a gas station, you put 5 gallons in, you're good for another 500, 600 miles.
Right.
I mean, once a month you fill up your tank and you're done. That's a game changer, and that kind of car is what's going to really drive it down. Like when I was in Europe a couple of weeks ago, every single taxi driver drives a Prius because gas there is expensive, so they all drive a Prius. All the Uber drivers drive Priuses because gas is expensive. It's a logical car to have. It's a decent size. It sits 4 people, and it has an okay trunk room. And it gets incredibly great mileage. Now they've made much better and much bigger improvements in it from Toyota. That car is going to outsell Tesla 5 to 1.
Right. So that's what exasperates the global supply glut, because you're clearly seeing declining demand, right? And you're still seeing oversupply. So I think those days and anything is possible in these markets. Those days of, $110, $120 per barrel.
Very
I
hard
think
to
that's
see it
very
ever
hard to
coming
see
again.
that.
It's very hard to see 60 ever coming again, really.
Right.
But I mean, you never know, because there could be a war. We could do this. I mean, with Trump as president, we could nuke somebody. Who knows what happens? It's just anything could happen. But in a logical, normal progression outside of massive disruptions, gasoline it's over. The gasoline era is over, and we're just sort of in a 20-year cycle or so of just people just aren't going to use it for cars anymore.
All right.
And trucks. It'll go to trucks too.
All right. Well, thank you very much, Phil, for joining me at MarketSite as always. And as always, Twitter, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.